Happy Friday, my friends. It's time. Been a long time. The boy's been busy, making things happen. You know how I do this. No secrets around here. A lot to talk about, though. A lot to talk about. Indeed. Mortgage rates continue to climb. Back over the 7% threshold. Yikes. What in the world? What are we going to do? We're going to talk about that. I'm going to show you the most important graph of our lifetime, which happens to coincide with what I've been telling you for some time now. We're going to discuss a few different things on the industry front, as National Association of Realtors is running out of liability insurance coverage, and their insurer has said they will not renew. So that's going to be interesting. We've got a couple of things. We're also going to look at some technical analysis today. We're going to look at the market overall. We're going to take a look at that, look at the details within. We'll look at mortgage rates. Let's go ahead and do that right off the top. Mortgage guy, everybody wants to know about mortgage rates. So let's knock this out of the park right away here, because they have gone up. They have gone up. Actually, first, before we look at these specifically, let's just look at the stories related to mortgage rates. And we'll talk about the Fed. You know, the Fed, look, the minutes came out this week, and basically, Fed officials expressed caution about lowering rates too quickly at the last meeting. Now, this was supposed to be a bearish post. It was supposed to be, but you got to pay close attention to it. Notice what they said. They're not discussing whether they're going to lower rates or not. They're not having a back and forth about, well, we should lower, we shouldn't lower. They've consensus. We're lowering rates. What we're discussing is how we make sure we don't do it too quickly. Okay, so pay close attention to this, because that's the real takeaway here. The takeaway is that Fed gonna lower rates. The question is at what pace? And I'm very, very cool with a slow pace. I think it's important for them to be deliberate here and not to drop rates too quickly, because I can tell you right now, if you're working on the ground level of this game like I am, very good week this week for my team, 6 new escrows. It's heavy, though. I mean, we have a lot of people who are trying to buy and can't. A lot. So the ground level in the real estate game in Southern California, well, particularly San Diego, and we're working with people all over the place. I've got people in Florida and Texas and many different places who work with our company that I assist with. So we've got people all over the place. But mostly, I'm going to be focusing on the San Diego marketplace. So notice, make close note of that. The market maybe thought this was bearish, but it's not. It's not at all. Mortgage demand takes a massive hit. Rates cross back over 7%. Okay, we're going to show you the rates in just a second. They did, on average, conventional rates did cross back over 7. Conventional rates just get absolutely, just thrashed when these things happen. The bond market, the Fannie Freddie bond pool just gets annihilated on these things. This, though, is something we're going to discuss later. This is related to rates. I'm going to show you rates right now, but with mortgage rates remaining high, renting is less expensive than buying. That's going to be the next thing we discuss after we talk about mortgage rates. So let's look at where we're at. Okay, here's national averages. And this is from Mortgage News Daily. This is the website and the link I always recommend to you if you want to keep track of mortgage rates. Just know my rates are lower. Let me pull my rates up. I went ahead and did these. Now, these are national averages over here. I'm pulling, 780 credit detached homes over here, for a minimum down payment on across the board. On the high balance ARMs, that's 20% down to get that 7.1. Jumbo also 20% down, for everything there. So, a little bit different than exactly what these are coming. But you can see where we really thrive, FHA, VA, we're much lower than what these average rates are. And that's bread and butter for us for sure. On the conventional front, yeah, we're going to be better than these averages when I'm running a 780 credit over here. So, these averages are going to include people with lower credit scores, people who are paying points and stuff. But you could just see, look at the rates are up. They haven't really dropped to the levels that we were expecting. Well, let's take a look at the chart. What is going on here? Why is this the case? Remember the support that I drew out when we got the big red candle last week? Okay. We were trying to figure this out. Like, okay, what is the deal here? How do we get, I just can't stand the way that this thing won't let me expand higher on this. This big red, bad red candle right here from 10 days ago. This was, this was no fun. This was no fun at all. But remember, when this was happening, I drew the support level right here. Okay. That is a bullish order block laid over the top of a bullish fair value gap. That is a really strong pattern. It's very difficult to defeat that pattern. When that happened, remember what my advice was, or what my expectation was. If we go down here, we're going to pop back up to it, and then we're going to see rates go much higher, and that would be bad. But I thought it more likely that we would come into this support zone and then shoot higher. And for those of you who are playing for the first time, we want mortgage bond prices to go up. That's how mortgage rates go down. Mortgage bond prices up, mortgage rates down. And let me just pull the stream back up. We are live here on multiple platforms. If you want to comment, if you want to say hi, and whatnot. If one of my besties, Donna Karen Ray, if you're watching right now, happy birthday to you. I wish I could make it to your party tomorrow. So here's what's going on. So I do think this is where we're headed. I do think we're going to come out of this. It was scary last couple of days. I mean, look, we were flirting with the bottom of the zone, but look at what's happening here. Tons of bullish absorption. A lot of the same stuff is happening on the Bitcoin chart. We're going to look at Bitcoin. We're going to look at Tesla. We're going to look at Meta at the end of this video. A lot of the same things are happening. They're very, very similar formations. And I think we're going to get the same result from all of them, which is higher prices. That should be good for mortgage rates. So this is what's happened. We have come back to an important support level after a big move higher. This is very normal. A consolidation, okay, at near the highs. But the problem is, and the reason why you're feeling this is because the difference between these highs right here and the bottom area of this consolidation zone is like almost 1%. It's close to it. It's like 0.75% in rate. And so we're feeling that right now because we were comfortably underneath 7% for conventional loans. We locked some conventional loans at 6.125. We had VA loans that were locked at 5.5. So those rates are kind of gone now. And now we're looking at a little bit higher rates, but you're still in the low sixes for FHA VA. You could still get into the mid to high sixes for conventional minimum down payment. So it's not all bad yet. Let's not believe all the madness just yet. Let's not go crazy with it. All right, let's get these out of the way. We got so many tabs open. It is insane. I always said I would never be that person. I just look at people's computers. They have like 30 tabs open. It's crazy. All right, so let's get this stuff out of the way here. And let's talk about this for a second. This is the first real discussion I have with you today. And we're going to get into numbers in the local market. Very important numbers, I think, to kind of understand what's going on. But notice the framing here. And I've been talking to you about this for quite some time. This is going to tie in to the next discussion we're going to have about the construction of multi-unit, the long game, which is to make more renters. Okay, Wall Street, billionaires, the elites, whatever you want to call them, lots of different names, Illuminati, deep state, whatever. Rich people do not want you to be able to own a home. It creates too much freedom for you. It's too good for you. And they want that money themselves. They want that freedom for themselves. They want you to be a renter. So you're going to see propaganda like this. Now, in my opinion, it should be law. I guarantee you that some entity related to that paid to have this article created. This is not an editorial piece, I promise you, because it's one of the stupidest things you could say. If Anna Teresa Sola really truly believes this, and an editor who looked at this article really truly believes this, they are stupid. Stupid. Because the average person knows renting is not a good long-term strategy. You could ask anybody. Hey, are you renting? Yeah. Do you want to buy? Yeah, but it's kind of expensive. Well, do you want to still be renting 30 years from now? How many people are going to say yes to that? Let's just think for a sec. How many people are going to? No, I mean, very few. Maybe the dumbest of the dumb, the ignorant of the most ignorant of us all. So there's no way in the world that this has any true. There's no true belief behind this. Here's a couple of the key points that she writes. The cost of housing is generally expensive across the board for Americans, whether you're a renter or a homeowner. Hey, there's some truth to that. While both housing and rent prices have outpaced wage growth in most areas, renting can be the smarter financial choice in some markets. Listen to this. Look at the framing of this. Also note the picture of the person they put here in the marketing. This is a professor of real estate and finance at Wharton School, University of Pennsylvania. Pennsylvania, one of the most corrupt states in the union. Now, one of the things that is very interesting about this is that there is not, if you read this article, which I recommend you read all these articles I talk about, just make your own opinion. I'm telling you my opinion. This is just my opinion. But you want your own opinion? Read the articles. So they're not giving you a time horizon. Because if you say, well, I'm only going to live in San Diego for the next year, will it be smarter or will it be more or less expensive for me to buy or rent? We can make the case on paper for sure that it could be less expensive to rent, especially if home prices go down or stay relatively the same and you have to pay for the cost of sale. You could make that argument. In short time frames, renting can make more sense circumstantially. But what we're talking about here is the long haul. I'm not here to talk about a year from now or 2 years from now. I hope no one thinks that's what this is about. I hope no one thinks that's what I'm about, because it's not at all. I'm talking about long game, win the game. You play to win the game. I used to have that button. I don't have it anymore. Real Spirit, I see your comment, and I'm going to 100% bring this up. So you can make the case over short term or over short time horizons. You cannot make that case over long term. If we just talk about 30 years, which is quite a long time, right? But that's most people are getting 30-year fixed mortgages. If you do a 30-year fixed mortgage and you pay it off 30 years from now, how much has that person's rent gone up over 30 years? You paid the same payment for 30 years, and now you have no payment. You see what I'm saying? So at a certain point in time, if you're looking long-term, owning is far better, far, far better. Now, someone might say, well, but you have the maintenance to deal with. And you have, and if I'm renting, I don't have to deal with the maintenance. Ask yourself this: why is a landlord willing to do that? Why are they willing to pay for that? Because it works out in their benefit in the long run. If you just look, and I would challenge everyone to do this, if you're curious about, what's taken place over the last few years with property values, you could pick just about any property. Go to Zillow, look at the Zestimate, look at the Zestimate history, and look back just look what the Zestimate is today, and look what it was 3 years ago. Okay, in that time frame, we've seen rates get hiked up. We've seen all this questions, geopolitical issues, wars, World War III, this and that. During that last 3 years, okay, rates have gone up a lot. And look at how much the house that you're interested in, look at how much it's gone up in value. And a lot of these homes, what we're seeing on average, are going up $5,000 to $10,000 a month. And I'm not saying it'll happen forever that way. You can't guarantee that, of course. But it's hard to swallow for a lot of buyers who were in the market 2 or 3 years ago, and they go and they look at the market today and they go, oh my gosh, what a mistake we made. Because they still want to buy. So if you want to buy, trying to time the market is foolish. Get in the market and let the market do its thing for you. We've got a lot of things with regard to that I'm going to discuss today. So let's take a look at this. So Real Spirit, I've seen this individual comment on the channel a number of times before. I guess I'm stupid. She says, I'm not sure. But I think renting right now is better than buying. You can rent for $2,500 to $4,000 a month. Buying will be $5,000 to $10,000 a month. So if you're just looking at the payment, like I said, in the short term, you can make the case that renting is cheaper. But what is going to happen, even if I get a payment that's $5,000 a month and you're renting for $2,500 a month, what's going to happen to your rent at $2,500 a month 10 years from now? Because my mortgage payment is going to be the same. But your rent's going to keep going up and up. And you're not going to have any tax deductions. You're not going to be building any equity. You're not going to be paying any principal. You're just going to be getting nothing. Nothing. So yes, you can make the case in the short term that is cheaper, quote unquote. But over the long term, it's much more expensive. So if you can agree with that, if we can agree that renting is not a good long-term strategy, I just use pure logic there, then why would you want to spend another minute in a bad long-term strategy? once you determine, like, fellas, like, once you determine she's the one, why would you want to spend any more moments not engaged or married? Do it. Get there. Get to the good stuff. If you know and understand that owning is better long term, why would you want to spend any more time in a bad long term situation? It just doesn't make sense. It doesn't make sense. And that will flow us right directly into this next article I want to discuss, which is a big one. I posted about this one on the real side of things, the shorts for YouTube. What this is here is this is an apartment study, okay, and we're looking at the last 12 months deliveries plus units under construction. Now, John Burns Research and Consulting, they do tons of real estate research. There's actually a lot of really good information in this article, which I recommend you check out the entire thing. But I want to show this graph because this graph for me really does it, right? And I think it's too small probably to see. So let me just make it a little bit bigger if I can. I don't know if it'll let me or not. Will it? Okay. And see what we're looking at here. So what we're looking at here is how many apartments were built in the last and delivered, meaning completed in the last 12 months, and how many are under construction. And it gives you all these different major metros, and San Diego is on there. It's down here near the bottom because we don't have a lot of building going on here compared to other places. There's no place to build anything. But you see 3,400 delivered in the last 12 months and 10,000 units currently under construction. So 3x. Now, when we look at this, why is this so important? Well, it's important because of what I've been explaining to you about how builders are making a much better business out of building multifamily than they are to building single family. So they're focused on building apartments and building, high rises and stuff like that for rentals. And there's a lot of reasons for that. It's a better business for them. It's easier. They can have the whole building sold before they even break ground. Okay, to a REIT, to a hedge fund, to a billionaire, whatever. They can have the whole thing sold before they even break ground, just off the plans. That's so much easier for them than doing individual environmental studies on every single address and stinking subdivision and people complaining about this and that. So much easier for them. But it also, it shows you the demand on that side, the demand to own that type of property, and ultimately rental demand. So people are saying to me, well, hey, because I posted this already, well, hey, if you have a whole bunch more rental units, that means rent prices will go down, which will deter people from buying. Mind you, we're not talking about this apartments. We're not talking about single family homes. It could impact the condo market. It could. In some of these places, it could impact the condo market. People may be looking to buy a 2-bed, 2-bath, and then they go, well, you know what? We can rent one over here for way cheaper. They're running a special over here because they got this brand new building and they're just trying to get it filled up. And we can get a great deal on the first year's lease. Sure, that may deter some people. Those people, though, I don't think who could buy and decided to rent will stay renters forever. In other words, they'll just become part of the pent-up demand. The question is, how many people will go and just get stuck there because it's so cheap and so it made it so easy for you. And then 13 years later, you're like, what the hell did I do? If we would have bought back before we moved in here, we'd have all this equity. We'd have 13 years down on our loan. Ugh. Why didn't we? Why didn't we do what we knew was obviously best? So what I'm trying to show you is that they're not building single family detached homes. When I talk about real estate, I'm not poo-pooing condos. I'm not poo-pooing townhomes and attached homes, but the golden goose is detached homes, particularly in San Diego County. Detached home, yard, you are good to go. That's what you want. That's the thing. That's ultimately the prized possession, the thing that they're not hardly making any more of. Very few, particularly none affordable, are being built right now. This also coincides with the reality of how cheap the detached homes are that are out there right now. You may think they're expensive. You may not like the payment associated with it if you were to buy it with your down payment. But if you tried to build it, it would take you 2 years and it would cost you way more than what it's listed for. Every single one of them, except for the ones that are already brand new, which is very few. But all those resales, every single detached home is listed for less than what it would cost you to build it, and it would take you 2 years. So you get to buy those 2 years and get a discount. Do you understand now why there's more upside? This is a fact. It's not my opinion. This is a fact. Those kind of macro realities are what drive markets. Some of this stuff is purely insane. Like if you look at New York, for example, it's 5x. What's going on there? I mean, that's crazy. Some of these other ones, like Austin, 3x, Atlanta, 1.5, Houston, 1.5, Newark, it's almost 4x, Charlotte, 3x. There's just a huge boom. So supply of these detached homes is already low. And now the people who could make more supply are saying, you know what? Better for us to go this way. That's what's happening. Please understand this. This, along with the reality of what it costs to build a new home on your own, is all you really need to know to understand holding real estate, buying, acquiring, and holding real estate for the next 20, 15 to 10, let's say 10 to 15 years is going to be a very, very smart investment. I just thought this was funny. So there's this guy. Let me see. Hold on a second. I think I'll see if there's any. I agree. Okay. We're in agreement then. Yeah, sure. If you can't afford to buy a house, you can't buy a house. You got to get on a path to do so. But if you can and you're choosing between the two, then obviously renting is a poor long-term strategy. So this guy, this town, I've never heard of this town, Carmel by the Sea. But anyway, this guy, this billionaire is buying up properties in this California town, and he can't understand why locals are terrified. He's buying up all the nice houses, and they're like, what is this guy doing? He's not being, he's a foreigner, okay? And he's not really, I think he's from Italy or something like that. I can't remember. But so he doesn't actually have bad intentions. And so the things that he's doing are a little bit, they look a little suspect because they're so out in the open. Most of the big money that's buying real estate with bad intentions, it's quiet. They're not coming through the front door like this guy is. But this is just an interesting article about the whole story. You can actually watch the video here. There's a whole story to it. And I think it's very interesting because a lot of very wealthy people are parking a lot of money in real estate. It's always been the case, but they're doing it significantly right now. They're not just buying multifamily. He's buying $5 and $6 million houses there. Okay, here is, now they're trying to sort of like make this hard to read because I'm not like subscribed. So sorry about that on this one. Office to apartment conversions. Where are they happening? We know what's a more important question to ask? Why? Why is it happening? Well, what have we been talking about? There is significant demand for apartments. There is less demand for offices. Yeah, we have all these buildings in here, so why not convert them? This article I'm not going to spend a lot of time on, but you can see there's a significant amount of this going on, and they show you, this is a really cool thing to check out. Great graph. San Diego didn't make the list on here, but a lot of places that you're familiar with did. Office to apartments pipeline. It shows you year over year. This is just one of those things that sort of reiterates what's taking place, where the demand is from big money with regard to real estate. When they first began this campaign, you saw a lot of them were buying single family homes, huge gluts of single family homes. They were buying them in packages, right after the crash. And they realized that that is a much longer road, and that the shorter path is going to be to propagandize, okay, and just push people towards rentals. They get these big office built. They're going to get these big buildings, these high rises that are going to be rentals. They're going to take those, and they're going to continue to push people towards renting. They're going to entice people with initial rents being very low and things like that. They're going to get a lot of people. They're going to rent them out completely, 100% across the board. So you can count on that. They're going to try to lure people away from real estate. Why? Because they want to be buying it, and they want you to rent from them. Do you see how that works? It's a very, very beautiful thing from a business perspective. I envy the strategicness, but it makes me want to puke when you think about the implications long term. So they got the whole thing figured out, and they're running game right now. Most important thing we can do is just buy some real estate. Once you have it, hang on to it. Don't sell it unless you have to. Okay. This was just sort of an interesting one. NAR, of course, facing lawsuits. Stuff is looking bad for NAR. It feels like there needs to be a new entity that comes up from this whole debacle regarding commissions. They're probably going to lose these lawsuits. And once they lost the first ruling, now the class action stuff is going to be crazy. We talked about, the first one was for like $2 billion. Then the next lawsuit they got is for like $140 billion. I mean, it's just going to keep getting worse. Once it's been determined by a judge that, yeah, you did do something wrong, now they're going to go out and find, attorneys will figure it out. Attorneys will attorney. They'll ambulance chase. They'll find people who were affected. They'll find people who bought homes willing to raise their hand for a couple bucks. And that's just what's going on. So they're swirling the toilet, to be honest with you. And it's just a matter of time before the suction pulls them through. So there needs to be another entity that steps up and takes the role that NAR had. It's going to be very interesting to see what happens over the course of the next few years with regard to this. Crazy stuff, man. Really, really crazy. What did he say? So the analyst for NAR, he said, NAR's insurance policy is tapped out. There are no funds available for realtor associations and MLSs for legal defense costs. That this is an enormous issue is understanding things. Yeah, that's an enormous issue. Big, big problem. Let's see this one here. Oh, all I wanted to say with this was I get so many calls and texts from people who are like, hey, I got this in the mail. Is this really true? Are rates really this low? Listen, if you get any kind of solicitation in the mail from a mortgage company, or you get some sort of text or cold call from a mortgage company, tell those people to pound sand immediately. There is no company that is operating that way that has your best interest in mind. That doesn't mean they're all going to rip you off necessarily, but definitely the chances are they will if they can. Because those are the types of businesses where the people who are the face of the business are completely Oz. I mean, they're back behind curtains. You don't know who they are. They have minions out doing the ugly work, and they're just trying to collect money on the back end. This case right here, this mortgage relief scam, Home Matters USA, whatever. I mean, these kinds of things are going on all the time. But if you just put your antenna up a little bit, you can avoid these things. And just note that, like, when someone reaches out to you that you've never heard of via mail, it's not someone you need to be talking to. It's just not. Don't talk to those people. Tell them to pound the sand. All right, let's see here. What we got next? Okay, it's time to get into the market, and then we're going to do some technicals. All right, so here we go. Strong sellers market still. Median price, San Diego, 1.3. Index around 60. This is an increase over last month. Okay, so last month we were at 56. What does that show you? This shows the market's heating up. Seasonally, we're kind of expecting that, here right about now. Rates have gone up, actually. That we were talking about. We just showed that in the last few weeks, rates have gone up. But the pent-up demand is just so significant, and the actual amount of supply is so low. Even with rates this high, the market is still moving fast, and prices are going, homes are going for well over list. In fact, I just had a buyer who told me yesterday that they had looked at a house that was listed for $779 and it went $100,000 over in Santee. So, talk to me about your real estate crash. Talk to me about it. Explain it to me. Come on now. All right, let's look at these numbers here. So I'm going to show you the graph for price per square foot because that's the really big one. But you can see what it's been doing. I mean, look at that, from 750 back in early November up to 800 now. That's the major one to look at. Average days on market, relatively the same. Maybe it's ticked up a little bit. Price decreases have decreased. That's something to look at. Relistings, relatively flat. Inventory trickling lower. And that's what you're starting to see. Absorption. More homes being purchased than have been coming up for sale. Rents are still pretty solid. The market action index looks to have bottomed. So it got all the way down into the mid 50s, nowhere near a buyer's market, which would be the 30s. And we're now back up to a solid 60. So it hasn't gone crazy yet, but I do think that's in the cards. Maybe not this year, maybe next year, but I think it's in the cards. And this is it right here. That's the graph. This is it. You don't need to understand anything I've said today so far if you can read this graph. This is average price per square foot in San Diego right here over the last 5 years. A little bit more than that. This goes back to May 20, no, a little bit less than 5 years. A little bit less than 5 years. Look at that. Just up and to the right, guys. Up and to the right. What's going to change that? What's going to keep that from happening? Is there some huge amount of inventory coming somewhere? It's not coming from builders. They're going the other way. So who's it going to come from? Tell me. Someone told me the other day, well, there's 11,000 people turning 65 or older every day now, and those people eventually, will die and they'll leave the homes to their kids, and their kids won't want to fix them up. They'll just sell the houses. They'll fire sale them. Okay. That's your plan for how the market's going to crash? Oh, good luck, my friends. Good luck. Household formation, people being born, cell pace of people dying, all that stuff. It just doesn't make any sense yet. But look, this is all you need to know. Up and to the right, we've got a few little pullbacks, and look what happened. This is just how you know you're in an ultra bull market. Look at this. Look at a pullback right here. Okay, from a peak in April 22 to a trough in December 22. Okay, we had a little peak and trough there. But look, each time it pulls back, it's a buying opportunity. And then again, we had a pullback in the middle of 2023, slight pullback. That was a buying opportunity, much higher now. We got all the way down to what, 723 per square foot. Now we're back up to 800. So you see, when you see, little dips, just get the absorption is just insane. That's bullish absorption. It's just absolutely crazy. So that's the main metric that I follow. This really tells you everything you need to know. And you can also see that the short-term average has popped versus the 90-day average, indicating aggression from buyers in recent closings. And recent closings were negotiated 3 to 4 weeks ago, minimum. So that tells you we started the year off with a bang, basically. All right, let's go. Oh, yes, sir. My buddy Michael, what's going on? We are live. Quick question from John. I don't know if John's in the Marines or if his last name is Marinas. Should homeowner get a 15-year mortgage and then recast it down the road? What are your thoughts on this? No, don't get a 15-year. There's no real advantage to that. If the 15-year rates were way lower than the 30-year rates, maybe you could make sense of it. But if you want to pay it off in 15 years or with a 15-year amortization, then just make that payment. You can get a 30-year amortization and then still make the payment to pay it off in 15 years and pay it off in 15 years without the requirement to do so. So if you hit hard times or if you want to make an investment or whatever, you need to do something else, you don't have that huge required payment. So yeah, 15-year doesn't make sense. All right. Now we're going to do some technical analysis. What are we going to look at first here? Should we start with, I think probably Bitcoin. We'll do Bitcoin first. Okay. So overall, target for Bitcoin right now is around 64,000 -4 standard deviation on the daily chart here. I think it's very likely that we get up into this range. Finally sitting on some nice profits here. My cost base is in the 33,000 range. We're at 50,700 right now. Ultimately, in the short term, you can see this formation. This is what I was talking about earlier with regard to mortgage bonds. But we don't have the bullish order block. We just have the bullish fair value gap, which is this yellow box right here. And you can see it's bounced out of there a few times. Now, when this happens, it's very likely, in my opinion, that this is what we're going to see. We're going to see it wick down here into this order block right here. And then we go up, touch this guy, and then we go. That's my guess what happens if we go higher right here. Of course, we could just, who knows? But if we're going to go higher, I think we're going to wick down first into this order block right here and then come up and reclaim that bullish fair value gap. Because a lot of times when you have these bullish fair value gaps at a local top, you will see like buyers kind of step in. Too many buyers will step in and then they'll take them out run their stops, and then move it higher. That's what I think is going to happen. We'll see. We'll see. I could be wrong. Been such a good move so far. And the front run of this support right here was a big tell for me. That was back in the 30s. I was totally expecting to come down. Just when it didn't touch that, I was like, oh man, we're off to the races. See you later. And that's exactly what's happened. We're up huge since then. So that's a Bitcoin thesis right here. Now, this -4 obviously also coincides with, a topping area previously. So I think it's a good chance that we go and test that and get some rejection there before going higher. But a couple things to keep in mind with Bitcoin right now. The halving is in April. That is not far away. And that means that the supply of Bitcoin coming to the market is going to go in half from miners. That's where the supply comes for Bitcoin and, of course, retail sellers. But we have the ETF approvals now. So there's live ETFs from the biggest companies in the world. Billions of dollars a day is flowing into those ETFs to buy Bitcoin with it. Why this is such a big deal is because Bitcoin has never had this before. People always ask questions to me well, why does the stock market just go up all the time? How does it just always, if you just look over long periods of time, it always goes up? Why? Because there's automatically money being put into the stock market. When you give money to your mutual fund, when you have a 401k and every paycheck, you're putting money into that 401k, all that money comes in to fund managers who then have to go press the buy button. So there's money flowing in on the buy side of stocks and indices at all times. That's why ultimately they go higher. We just had a candle close right there. So Bitcoin is now in that position, finally. And that will provide a lot of support, a lot of downside support, because this type of formation right here, we probably in the old days for Bitcoin, we would have seen this thing wick way down by now. But you'll see, the sort of the bullish absorption taking place there, all those bottom wicks. It's ETF money coming in. Fund managers have to go there and they can legally go in and buy Bitcoin now. So they're going in and doing it based on the money that's flowing in through the ETFs, and we haven't had that before. So there's a lot more support for Bitcoin than there ever has been. So couldn't be more bullish long-term on this one. Let's take a look here at Tesla, and we'll do Meta as well. And then I will also look at the S&P 500. So Tesla has been in this forever downtrend, right? I've been talking about this for an eternity. Every time it comes up to the trend line, it bounces off of it. Couldn't get to it here. Came up and touched it again. This was just back in December, the end of December. I thought for sure it was going to climb over this thing and head higher, and it just hasn't. And now we've gotten some support down here in the 180 range. I've been buying all through in here. And still accumulating Tesla. I don't have all the Tesla I want yet, but we could see lower prices. You never know with this thing. But once this trend line, this huge trend line breaks, that is where I'm going to really load the truck up. And that's where we see something shift with Tesla. Probably has to do with the robot. It's probably not car related. It's probably AI or robot related. What's wild to me is watching NVIDIA go insane for AI reasons, and then and seeing Tesla go down. Like the number one AI company is Tesla. Tesla's the number one AI company. I don't know why it's not trading that way. Everyone thinks it's NVIDIA or Facebook, Meta. Sorry. Let's look at Meta too. But not the case. Tesla's by far, they're way ahead, way ahead. They have self-driving cars, y'all. That's AI. Have you seen any other AI better than that? I mean, ChatGPT is cool, but it ain't driving a car. Here's Meta. The huge beat recently was obviously unforeseen. This is one that I just, God, it just kills me, because I sold this guy like right here, right around 300. It's like 295 right there is when I sold it. So I was like, okay, it's done. Time to go night. And look at this thing, up $200 a share since then. And I was using those. I bought it so good. We got it. I mean, I was buying this thing when it crested under, when it went under 100, I absolutely loaded up the truck. And then I bought basically this whole time right here. And I started buying way back here at 200 when it got this first gap down right here is when I first started accumulating right there. And I really loaded up the truck here, sold it here. Looked like great trade, felt like good. Number one mistake I've ever made is selling too soon, but I'd rather sell too soon than too late. And a very, very smart person told me that one time. And I said, okay, I'm going to believe you. So Meta here is looking a little bit overextended. I do think it's likely this gap will get touched. I don't know when, but I don't think that this gap just goes untouched. So if you were wanting to buy, I don't think there's any reason to buy up here. If you want to be a long-term holder, and it's very likely that you will at least, get the chance to buy it down here. You can probably get this gap filled. You could probably end up buying at 400. I'm just saying, versus buying it up here, it's a very good chance that that gap gets filled at some point. So that's a nice thing about long-term investing is you can just put your bids in. You can just be like, okay, you know what? I bid 400. Just walk away from it. Good till canceled. See you later. Let me know when I get some. And that's what's nice about those. Coinbase has been running here too lately. All right, let's look at the S&P. Let's see here. This is actually a good point. Bitcoin does tend to go a little bit lower right after the halving, and then it lights up about 6 to 8 months after that. Good point. So here's the S&P. Now, I've been tracking this channel. You remember when I first looked at this channel, and when we broke here, it was like, oh man, that is no bueno. But look how quickly and aggressively it was reclaimed. This is back in October. That was when this was really, at the end of the day, this was a liquidity flush right here. And you can see the breaker right there. Once you got past that. So this was a flush, and we've now seen a huge move from it. Let's get out the old standard deviation Fibonacci's quick. I should have had this on here already. Sorry. This is very, very clear. Now we're getting close to the 2.5. Is that where it's going to stop? Maybe, maybe not. Will we see a 5,500 S&P? Could. I don't think it's done. I mean, it just doesn't seem like it's done. It appears to me that from a stock perspective, what we're seeing right now is we're seeing a buy the rumor, sell the news, setting up for rate cuts. So in other words, buy now, push prices higher, rates get cut, dummies buy, become our exit liquidity, we sell, buy the rumor, sell the news. That's what it looks like to me. And the fact that it was able to get out of this channel, just the fact that we liquidated below the channel and we're now trading above the channel, we actually gapped above it. When you gap above resistance levels like that and you're in all-time high territory, one of the things to remember about all-time highs, usually when you get to an all-time high, it goes a lot higher than you expect. That's just usually what happens. And so that's what I'm expecting to happen again here. We shall see. We shall see. But it's going to be interesting nonetheless to watch this play out, because once you're in all-time high territory, you're in blue ocean. 100% blue ocean. And that's where we are right now. So good luck to us. Good luck to all the investors out there and everything that we have going on. So, all right, I think I've got to a point where I've got to get some stuff done. That said, check out these links. Do your own research. This is just my opinion. But at the end of the day, if you want to get a smoking deal on a home loan, you know who to call. You want to pay lender fees, you want to get a wholesale home loan rate, your boy has got you covered. Not just here in California, but all over the place. Got like 10, 11 states now. Give me a shout. You're around this weekend as well if you need me. Have a great Friday night, my friends. And I'll see you again soon.